Hello and welcome to Future Squared. Stephen Hawking once said that intelligence is the ability to adapt to change, so let's adapt. My name is Steve Glaveski, and each week I'll bring you conversations with preeminent thought leaders from a variety of fields to help you think in a multidisciplinary way, kick goals in your professional and personal life, and better navigate what is fast becoming a brave, new world. Future Squared is brought to you by Collective Campus, an innovation accelerator that works with organizations to unlock their people's latent potential to create more impact for humanity and lead more fulfilling lives. If you need help driving your organization's innovation strategy, visit collectivecampus.io. And without further ado,
come with me if you want to live.
My guest today is Cruz Enochs. Cruz is a core contributor to the product growth and community team at Index Coop, a new age crypto index fund DAO aiming to become the Blackrock of crypto. Index Coop's mission is to build products that make crypto investing simple, safe, and accessible to all. In today's conversation, we discuss how crypto index funds differ from traditional ETFs. We unpack the inner workings of Index Coop's business model. We talk decentralized finance's big regulatory moments, and we even touch on music NFTs. So with that out of the way, get ready to listen and learn in my conversation with Index Coop's Cruz Enochs. Welcome to the show, Cruz.
Thank you for having me, Steve. Happy to be here.
It's an absolute pleasure to have you here, and you're joining me all the way from Atlanta, Georgia. And as an Australian who's never been there, I've basically got like 3 reference points for Atlanta: the 96 Olympics, Coca-Cola, and Dominique Wilkins and the Atlanta Hawks. I grew up in the early 90s, and that's basically all I know about Atlanta, man.
We've got a stellar airport as well. I'd add that to the list. I think it's like the most trafficked airport.
Fantastic. I'll add that one to the list. So you head up product growth and community at the Index Coop, and we're here today to talk all about DeFi and crypto index funds. But before we get into that, I'd love to learn a little bit more about how you came to get into crypto, because I understand it hasn't been all that long, and for a while you were working in the space of software. So what can you tell me about your evolution into the space?
Yeah, that's right. I kind of really dove all the way in just about a year ago now. Mm-hmm. So really kind of always had an interest in investing. My dad's a financial advisor. So he always wanted me to kind of take over he's got a one-man kind of family business as an RIA. Always gets tons of questions about crypto, right? Well, what is Bitcoin? His clients are calling him all the time. But I didn't want to take over his business because from my perspective, it's just a little bit sleepy. He's kind of always, guiding people on a path of financial responsibility and whatnot. But I didn't want to kind of just advise people to keep their S&P 500 and play it safe. I wanted to be out on the cutting edge of technology. So when I went to college, I majored in information systems, and I worked at an analytics as a service startup for a little while, and then in product management at an enterprise SaaS company that did supply chain software for a little bit. And then kind of fast forward a bit in the pandemic, I'm working from home. I got a lot of extra time, kind of a familiar story for folks kind of working in the software industry. When you go to work from home, you've got a little bit of extra time. You're working remotely a few hours a day, you're working, got a few extra tabs open, doing a little research. Long story short, kind of went down the crypto rabbit hole. And then towards the end of the pandemic, I took this cohort-based education course for folks that wanted to work in crypto, actually run by Anthony Pompliano. If you kind of look up his social profiles, he's kind of one of the biggest Bitcoin influencers on crypto Twitter. He created a cohort-based education course for folks that wanted to transition to working in crypto. I popped into the first cohort of that in January of 2021, kind of learned about DeFi, NFTs, DAOs, all of those things were covered in just 1 hour session. Because NFTs were barely even a thing. People hadn't sold this big piece for $69 million. That was a huge story that happened afterwards. But anyway, I learned about DeFi there. I ended up buying this index token called DPI to get exposure to all the different DeFi protocols I learned about, right? DeFi is basically rebuilding the financial system on these new crypto rails. Mm-hmm. It really all came full circle for me. I invested in that product because I wanted broad exposure to this sector without having to do the research myself, kind of like how my dad advises his clients to do as a financial advisor. And then I found out that this DPI index was created by a DAO called Index Coop. A DAO is basically just a crypto startup. Perhaps we'll dig into it. But when I found out that, folks on the internet were creating these products together and deploying them on the blockchain, brought it full circle for me. All of a sudden, the idea of kind of a financial advisor and then helping educate folks on making savvy investments, all of a sudden it's pretty interesting to me if we do it on these crypto rails rather than in the old traditional finance world. So that's how I got started at Index Coop.
Oh, that makes a lot of sense. And we previously have covered the concept of what a DAO is, a decentralized autonomous organization. So if people aren't familiar with that, go back and listen to the episode with global coin researchers Gene Kang. But essentially, you kind of hit the nail on the head there where you said you invested because you wanted to get exposure to a pool of assets in crypto, which is essentially what an index fund is. And it's funny because you said you got into it about a year ago and you're currently heading up product growth and community. And a year in the crypto space in Web3 is kind of like 10 years anywhere else. And I imagine the learning curve that you've been on over the past 12 months is probably more intense than anything you've previously experienced.
Yeah, no question. I'm a contributor in the product growth and community teams. We don't necessarily have heads of everything at Index Coop, right? A DAO doesn't have a centralized leadership or any sort of CEO. But yeah, I'm a contributor to those teams. And, I first joined the DAO in April of 2021, kind of officially. I maybe invested in the product in February or March and just started to learn about what was going on here. So yeah, definitely is a long learning curve. At first, you're kind of you're a lurker, you're reading the forums, you're reading in Discord, watching all of these things happen, and just takes a while to kind of start to understand how you can contribute and really add value to those things. But yeah, I think when I joined, I was on the first ever onboarding call where we had an official new joiners call every Thursday morning for folks, that kind of had expressed interest and joined the Discord for the Index Coop or Index Co-op. You can say it either way. It's decentralized, even at the name level. I was on the first onboarding call and, they kind of just explain what Index Coop is, what are the products, and then start to give an overview of how folks can get involved. And, it took me a few months, like I said, but eventually kind of found a role adding value to the growth team by just helping share educational content that explained our products, right? I had a little bit of a background trying to help my dad understand crypto and field all of the questions from his clients about what Bitcoin is, what crypto is. So I was able to help explain what our products are to that kind of traditional audience, right? That's used to, learning about ETFs and index funds and the kind of traditional financial products.
Yeah. And it sounds like if you were to recommend to someone who perhaps was looking to get into the space, not quite sure what role they could play, perhaps it's just a matter of joining a few different Discords that resonate, listening for a while, perhaps starting to contribute. And at some point you kind of, with all of that exploration, you kind of find your way to a path to essentially exploit and spend more time on. Is that essentially the approach you would take?
Yeah, I would agree with that, definitely. So, in crypto right now, most things happen on Twitter. So you got to be on crypto Twitter, right? And kind of browse around, find a DAO with a mission that particularly resonates with you, right? I think working in this Web3 economy, you really want to find the projects that you're intrinsically motivated to work on. And then from there, join the Discord. You can lurk for a while and start answering questions, right? If you see an answer, in a chat and someone has the same question as you, add a little value to the DAO by answering questions. Folks start to kind of build familiarity and see your name, but definitely join a few different DAOs, find ones with missions that inspire you. And I think the other thing I would say that joining a new DAO is more like moving to a new city than starting a new job. So it's very important for you to find friends, right? Making your first friend in a DAO is kind of what you're looking for because there's no boss to tell you exactly what to do, right? You just got to find the people that you're going to work well, that you have similar interests or kind of inspired to work towards the same mission.
Yeah, fantastic. That's good advice. And with respect to the Index Co-op, I'll call it the Co-op for the purpose of this conversation. How big is the team at the moment and how big is the extended community in the DAO at the moment?
Yeah. So the team, I would say it's around 100 contributors that are, contributing regularly to the DAO and are receiving compensation. And then the broader community, There's a lot of people that have joined the Discord server. Most of them kind of just click in one time and maybe never come back. Some of them come in and only lurk. Some of them come in and ask a few questions. But, it's around 9,000, 10,000 people in the Discord server, something around 40,000 followers on Twitter, depending on how you want to classify those folks as part of the community or not. Yeah, those are roughly the numbers.
And then in terms of the actual Looks token, do you know how many wallets are holding Looks at the moment? Roughly?
Yeah, that's a good question. Index would be our governance token, but all of the products have their own ticker symbols. We got the DPI that I mentioned earlier. Maybe we can talk about some other products. Roughly 5,000 holders, I would say, of our products. A lot of the assets are kind of concentrated in, the wallets of some larger players, like many things in the crypto space. But it's definitely been broadening out a lot recently. It's been nice to see as we deploy our products onto layer 2 scaling solutions where it's not, you're not having to pay crazy gas fees to buy a product. It definitely makes crypto more accessible when we deploy it on those other scaling solutions. So it's definitely part of our strategy to broaden up that number of wallets holding our products.
Yeah, fantastic. And I mean, if we look at the history of index funds, we go back to say the mid 70s, Jack Vogel, Vanguard, essentially giving people exposure to the S&P 500, reliably predictable returns, 7 to 10%. The idea was low fees. You're not paying someone to actively manage the fund. And if you set and forget and hold it long enough, more likely than not, you would come out in a very healthy position, especially when you take into account compounding. Now, how is the Index Co-op? How are the Index Co-op index funds similar or dissimilar to, say, a Vanguard when it comes to this concept of index funds?
Yeah, so I think people often refer to Index Co-op as the Blackrock of crypto, in that we build structured products within crypto is how we kind of present our tagline. So it's not necessarily just the kind of the broad market indexes that Vanguard is most famous for, right? Our product suite is primarily composed of two kinds of products. We have what we call composite products, and then we have an automated indices products. So the composite products are all those kind of passive exposure sector indexes. So like our main products, we have the DPI, the DeFi Pulse Index, gives you broad exposure to all of the top DeFi protocols. We have a Metaverse Index, gives you broad exposure to all of these metaverse protocols that kind of span across gaming, entertainment, virtual worlds. We have a data economy index. So, you can think of them as like thematic sector indices in the composite side. And then on the automated indices side, we also have leverage tokens. So we call them the flexible leverage indices. There's an ETH 2X, a BTC 2X, a Matic 2X, right? So we can help folks take out a leverage position by just holding a single ERC20 token, right? And then on the back end, what we're doing is taking some ETH, depositing it into a borrowing and lending protocol, Compound or Aave are the two that we build upon. So you get 2x exposure to ETH. We take the ETH, deposit into Aave, take a loan of stablecoins out against it, and then buy more ETH, right? And then we abstract all of that complexity away for the end user. So all you have to do is buy the one ETH2X Fly token, and you're getting 2x exposure to ETH.
Wow. Fantastic. And essentially taking away a lot of the work for people. Because if you were to do this yourself, not only does it take up time, but if you're new to this space, like the educational sort of learning curve is quite steep. There's a lot of complexity, the security risks and all sorts of stuff you need to worry about. And you're effectively taking that off the table for people.
Absolutely. Yeah. It's all about abstracting complexity away on the automated indices pod, right? The complexities of taking out that leverage position and then also the management of it, right? So you don't have to worry about your leverage position getting liquidated if we're managing it for you. And the smart contract is automatically rebalancing. And then on the composite side, it's about, taking away the research time that you have to do to invest in all of these different protocols, right? So we typically will partner with a methodologist for any of those composite indices. That is kind of a domain expert or a data provider. So DeFi Pulse is the methodologist for that DeFi Pulse index. They are essentially like an analytics dashboard for the DeFi industry, right? If you go to the DeFiPulse.com, it's going to give you a nice dashboard of all the different DeFi protocols. And you can look into, how many assets are locked into that particular protocol and how they've been performing over time. So yeah, we partner with industry-leading methodologists that kind of do the research and manage all the allocations of those sector indices, so the end user can just buy that one token and know that they're getting broad exposure to their chosen sector.
Excellent. And it's interesting because you did mention a moment ago that because you guys manage this, it doesn't leave investors susceptible to being liquidated. And I've seen that play out with a number of, questionable DeFi plays recently. One of which I believe was Wonderland, where a lot of people had borrowed to buy this time token. And I'm sure you're across what's happened there. And a lot of people had their positions liquidated. And I guess it's one of those things where borrowing to invest in what are incredibly risky assets is probably not the best or smartest move at the best of times. And effectively, that's one thing that the Index Co-op helps to shield people from, particularly if you're looking to invest in a pool of assets as opposed to try and pick winners yourself.
Yeah, absolutely. Something that's great about DeFi is that we have these 24/7, 365 markets that are always on, always accessible. But that means that you can get liquidated overnight if ETH drops by 20%, right? If you have a leverage position that you're trying to maintain yourself.
Yeah, excellent. So the Index Co-op, you guys operate with the Trinity. I mean, you mentioned the methodologist that you have for the DeFi index, which is DeFi Pulse. And the Trinity is platform, organization, and methodologist. Now, I'd love to just unpack these at a very high level. What is the Trinity and how do these three factors interplay?
Sure. Yeah. So I would say the platform that we're built upon primarily it's called Set Protocol. This is a protocol that allows anyone to create their own index token on top of this Set Protocol.
Yeah.
So that's the infrastructure that we build something like a DeFi Pulse index in, right? The methodologist comes in, they're a data provider or a domain expert in the field, provides the methodology that kind of specifies what the holdings or allocations are going to be of the index. Supply that methodology to the Set Protocol contract, right? So that contract is immutable, deployed on the blockchain. Anyone can use it. The methodologist is that data provider that kind of provides the context. And then Index Coop is the organization that kind of is the growth marketing arm for these products, as well as the technical operations or like rebalancing as a service to the methodologist.
Right. Excellent. So you did mention earlier that you've got a number of different funds. You mentioned, the quote unquote metaverse fund, the DeFi fund. And when I look at the metaverse index, you've got players in there like the Sandbox, Axie Infinity, Decentraland, Rarible, Audius, Whale. So lots of big names in the space. Well, I imagine this is part of what the methodologist does, but what sort of criteria do you use when determining whether or not a token can be included in a particular index or not?
Sure. Yes, so exactly like you said, this is up to the methodologist to determine the stipulations or the rules as to what is included. And I think what they primarily went with, there's a categorization of tokens done by CoinGecko, who is a kind of a leading data provider in the space. Again, kind of a discovery platform where you would go and kind of see the rankings of all of the top tokens by market cap. And they have a category called metaverse there. And, it's quite a difficult thing to define the metaverse. I think at a high level, it just describes the theme of the blending between the physical and virtual worlds. So that theme is all about the increased amount of commerce happening in the virtual world versus the physical, right? You kind of take it to 20 years ago, maybe that meant moving from retail to e-commerce and you start to order things on Amazon rather than going to Walmart. But increasingly now it's about spending time in the virtual world and buying virtual items online that they don't ship it to your house like Amazon does. They just, you buy an item in a game in the sandbox, right? And you can interact with it digitally. And there's a kind of a variety of different takes on that you'll find in that metaverse index. But yeah, broadly, it is the blending of the physical and virtual world and folks spending more time online and buying things on the internet, whether it's NFTs, whether it's digital avatars, or even music with something like Audius.
Yeah. And so I guess back to the original question, which was what's the token inclusion criteria when assessing which platforms, whether it's a Sandbox, whether it's Axie Infinity, should actually be included in a metaverse index?
I guess the other criteria there, it needs to have an ERC20 token, meaning that the token is native to Ethereum rather than being off on its own chain or being on Solana. Or projects like Star Atlas is like a pretty popular game on Solana, but we're not able to include that in the index because there's no liquidity for it on Ethereum. And I guess the other thing I would say, we definitely have, the project needs to be live for a certain number of months, right? It has to be a proven project for us to include it index. And it also has to have enough on-chain liquidity such that we can rebalance in and out of that position without incurring, a bunch of slippage costs. So it's a market cap plus liquidity are kind of the quantitative criteria that you have to meet to be included in the index.
Yeah. So when it comes to balancing, obviously, if someone has a portfolio, they perhaps might have, say, 70% in equities, 20% in bonds, maybe 10% in real estate, whatever the case is. And every 3 months, 6 months, 12 months, they might rebalance that portfolio. Now, in the case of, say, the Metaverse Index, in terms of evaluating or reviewing and updating that index and maybe introducing some new players into the index, how often does that happen? Is that automated or is that done, say, on a monthly, quarterly basis? What's the process there?
Yeah, that's done on a monthly basis. At the end of the month, we'll run all of the allocations through the formula of market cap plus liquidity and give it a score and rebalance. And yeah, that same interval monthly is when we will introduce new tokens into the index if they're now meeting the criteria of market cap plus liquidity.
No, that makes sense. And I think that kind of aligns with your traditional index funds that are, say, indexing the S&P 500, and that is a fluid index, and therefore the exposure is fluid with it. The other question I had, though, is like when we think about traditional index funds, we think about relatively low fees, maybe something like 0.06% in some cases, sometimes a little bit more, sometimes a little bit less. And of course, over a long period of time, when you account for compounding and everything else, those small percentage differences in fees can actually add up to quite a lot over time. So what do the typical fees look like with the index co-op? And is that something that you think will evolve over time as the co-op gets bigger and bigger?
Yeah. Typical streaming fee on those composite indices is 95 basis points or 0.95% annually. Yep. And yeah, you can think of that essentially, we call it a streaming fee, the same as an expense ratio on an ETF. Yeah, that's paid block by block, actually, over the course of the year. It kind of gets paid through inflation where we issue new units of the token. Yeah, but that's a bit technical in the weeds. To the user, 0.95% per year. That's what you're paying in management fees. And then on the automated indices side, we're a little bit higher. I think 1.95% per year for maintaining those leverage positions within the token. And then there's also mint and redeem fees that are actually usually paid by arbitrage bots, not the user, because typically you're just buying those tokens on a decentralized exchange, right? A Uniswap or a SushiSwap, rather than minting and redeeming new units yourself.
Yeah, makes sense. And with respect to, say, crypto winters, we didn't quite have a winter recently, but there was a little bit of a bear in the room with prices correcting somewhat, but we have seen prices bounce back pretty strongly over the past 7 days. I think Ethereum is back up by like 30%, Bitcoin's up 20% over the last 7 days. So things are looking up, hopefully, but there are lots of other systemic things going on. Got a lot of question marks around interest rates and everything else, which might affect those prices. But would you consider investing in index funds somewhat of a hedge against crypto winters, given that you do have a diverse pool of players in a particular fund? Or do you think that more or less when we have a crypto winter, the value of an index fund, the returns are going to drop with it?
Yeah. I would say investing in these diversified indices is not a hedge against a crypto winter or a bear market. Certainly, everything is all correlated in crypto land. You certainly have seen it over the last several years. When the price of Bitcoin goes down, the price of everything in your metaverse index and your DeFi index is all going to go down with it. We have actually, though, just today, we launched our first inverse token. So we released an inverse Matic flexible leverage index today. That, if Matic goes down 10%, the price of this token goes up 10%. And it kind of just is the same technical infrastructure of those 2x flies tokens that I explained, just in reverse. So, there's how you hedge, providing that product. We'll see how popular it is. I think it's not terribly popular in crypto world to hedge or to have these
it's
inverse
a bet against
tokens.
crypto.
It's a bet against crypto. Everyone's in here because we're bullish on digital assets, but it's certainly important for the sustainability of the Index Coop to make sure that our revenue is not going down with the value of all of these crypto assets. So excited to serve that side of the market as well.
Yeah. So, Inverse Matic is one of your new products that you've just launched. Are there any others in the pipeline?
Yeah, we will be launching an Inverse ETH token later the same week of the Inverse Matic one. And then we'll see a BTC 2X and Inverse BTC before the end of the month here as well.
Excellent. And with respect to launching these new products, you mentioned earlier that Index Coop is a DAO, which means there is decentralized control. There is a token that people use for governance and voting on these decisions. In terms of deciding which new products to take to market, is that a decision that goes before the community to vote on?
Yes. New product launches do go to a token vote. We have a governance token called Index that folks do get to have a yes or no vote on products coming down the pipeline. But we're increasingly transitioning to kind of having the roadmap decided by our product team rather than kind of a fully crowdsourced method of just, waiting for folks to propose new products and just having the up-down vote from there. Yeah. We do kind of have the prioritization managed by our own product team to make sure we're getting out the products that the market and our customers demand of us. But ultimately, yes, the go or no-go vote is up to the Index token holders.
Yeah. And it's an interesting tension because you just said, moving towards having the product team determine what the product roadmap looks like, which sounds more centralized, which kind of flies in the face of the whole decentralization thesis. But to me, based on what I've seen in the space and based on what I know about organizational hygiene, sometimes having a balance between the two seems to work best in terms of that trade-off between speed, convenience, simplicity, decision-making. How do you see that tension playing out?
Yeah, I think ultimately the product roadmap is decided by the market and the customer, right? Mm-hmm. And we're just able to kind of tighten up those feedback loops. And our product team is able to take feedback from the market and customers and doing surveys and whatnot to figure out what the market is demanding, rather than just having the community throw 1,000 different darts on the forum, having a yes or no vote, launching whatever products people vote up yes. And then, if you launch 10 products and only 2 of them succeed, the rest fail. We're just tightening up that feedback loop with a little bit of centralization, because we believe that the folks on our product team are able to execute better than just throw 1 million darts at the wall kind of approach.
Yeah, fantastic. And the Index Coop at the moment, you guys have about $220 million US under management. That's a lot of money for a relatively new organization. Now, when it comes to earning and maintaining the trust of existing and prospective investors, how do you go about doing that? I imagine smart contracts being audited for one, a white paper published, a reputable team, things of that persuasion. But what else goes into the mix to ensure, there are, and I'm not suggesting that the Index Coop is one of them, but there are rug pulls that happen in this space. What are you guys doing to ensure that there is that element of trust?
Yeah, certainly on the smart contract risk side, our contracts are all built by the SET protocol. And yes, absolutely well audited contracts. They've gone through multiple audits and are well battle tested at this point. And I think the larger point to make here is that we do not have the ability to take assets out of those products, right? The tokens that we create are totally decentralized in that they are permissionlessly redeemable for the underlying assets. If you buy some DPI index tokens, you're buying a token off of the open market. You have custody of that token in your wallet, and you can always redeem that index token for the underlying assets, the protocols within it, the Uniswap, the Comp, the Aave, and you could sell those on the open market. You don't need Index Coop to give you your money back. That index token that you hold, that you custody in your own wallet, is permissionlessly redeemable for the underlying assets. And for that reason, the indices are always tracking very close to net asset value. And we don't have any control over your assets at all.
Yeah, excellent. Great answer. And on the topic of maybe security and trust, moving towards, say, regulation, of course, DeFi is still a mostly unregulated space compared to traditional finance. And there's been a lot of talk in the media lately around, is it a commodity? Is it a security? Do we regulate it? Do we not? My personal view is there's a balance perhaps between safety and security on one side with innovation and progress and speed on the other. What are your thoughts on regulation? Should we be regulating? Should it be as a security, as a commodity? What are your thoughts on regulation in DeFi?
Yeah. I think all of the serious builders in the space welcome regulation. I'd be happy to see some regulatory clarity introduced into the space. I think all of the serious builders are just kind of tired of the uncertainty and us not having much guidance on what is a security, what's not. The SEC is moving incredibly slowly on this.
Yep.
And, I think when and if they do, I guess I have to say if at this point, it's taking so long. When and if they do, I'd expect to see some kind of maybe some short-term volatility and us having to react to whatever regulations they do introduce. But I think it would be bullish for this space overall in terms of new talent coming in and feeling comfortable building organizations, building products in this space. And I welcome it personally, but also, they cannot stop folks from writing code and deploying it to Ethereum, right? Perhaps, everyone that is a contributor to this DAO has to move out of whatever country kind of cracks down. But the products we're building are permissionlessly accessible by anyone with an internet connection and a crypto wallet anywhere in the world. And that's really the power of what we're building here with these permissionless, decentralized financial products.
Yeah. It's a great point. And I think also the fact that if we look at the lack of regulation at the moment, it is holding back some people, like you mentioned, talent, but also potentially smart money that are just kind of waiting to see what the Federal Reserve says or what the SEC says about crypto assets. That will give them a sense of confidence, and potentially you'll see a lot more money coming into the space once there is that regulatory clarity.
Absolutely. That's been kind of one of the largest headwinds for us in getting institutional money into our products. Mm-hmm. And our products are not yet available on centralized exchanges like Coinbase because they're waiting for a legal opinion that a crypto index product is not a registered security that's allowed to be sold. And then on another front, not just the kind of the hard institutional money there, but financial advisors. I mentioned my dad's a financial advisor. Right now, we actually work with a DAO. There's a DAO called Planner DAO, kind of a decentralized community financial advisors getting together to just get educated on crypto, get smart, and help figure out how to allocate for their clients. What they're waiting on right now is, again, a legal opinion that it is okay for a fiduciary to put client assets on chain just to use DeFi at all. That's like the number one thing that they're waiting on. And I've been working with Planner DAO. There's a great team of financial advisors that have all kinds of digital asset certification they're working on to help educate financial advisors, but they're just waiting for the legal opinion that it's okay to put client assets on chain. And even, there's the volatility of crypto assets. Certainly it only has a small place in people's portfolios, but even I think what we're really waiting for is regulatory clarity on stable coins as well, right? Because there's a huge segment of people's portfolios that could just be cash seeking yield, right? The financial advisors can help you put your stable coins on chain and DeFi. You're seeing very common to see yields of 8%, 10% rather than, the 0.01% and you're getting in your bank account right now. The whole macro mess of finance right now of everyone seeking yield in this inflationary environment. But they're just waiting at the gates right now. They're waiting for clarity.
Yeah. All the, 600 odd percent that Looks Rare is paying with the 600% APY. Of course, there are risks associated with the underlying token going to zero, but that's, of course, with anything, this does not constitute financial advice, and you should always do your own research. But with respect to the distribution question, so I was going to ask you about bringing more people investing into index funds. It sounds like, partnering with financial advisors and the likes would be an obvious, distribution strategy. But until that fiduciary question is resolved, it sounds like that's kind of on ice until then.
Yeah, that's correct. So institutionally right now, we're targeting Family offices is our number one target on the institutional front. Those are the folks that have ventured into crypto so far as kind of larger managed money that's being entered into the crypto arena. So one big milestone for us recently was getting our whole thematic suite of those composite indices supported by BitGo, who's a leading custodian of digital assets. And that's where a lot of kind of the family office types custody their assets. So they have basically BitGo's a third party that kind of maintains the wallet and the security for you, even though you're still using these decentralized or non-custodial assets, but, just loading that little administrative bit to a third party to actually hold the assets for you, the same way that a custodian might hold gold for someone.
Yeah, no, that makes sense. And with respect to institutional investing as well, I mean, we've seen large institutions warm up to crypto quite a bit in the last 4 years. I mean, it wasn't long ago that Jamie Dimon was basically throwing Bitcoin under the bus, and now JP Morgan and Morgan Stanley and Citibank and everyone else are investing, it seems, quite heavily into crypto analysts. I mean, is this a trend you see continuing to build steam over the next few years?
Yeah, absolutely. I think right now you see a lot of these larger institutions are eager to hire younger folks, maybe, folks that spend a lot of time on Twitter and Discord that can kind of sort out what's really going on in this space. So that's definitely a trend I expect to continue, as well as kind of more experienced players in those institutions jumping ship to join the Web3 world. Our head of the institutional business group at Index Coop is Mike Termina, who used to be a VP of Morgan Stanley. So you certainly see talent already kind of starting to cross-pollinate in both directions, as well as there are increasingly more DeFi protocols that are spun up with the sole purpose of catering to institutions, where you may see something like Aave Arc is kind of creating a new version of their products only for whitelisted institutions. And I interviewed just a few weeks ago, there's a protocol called Maple Finance, where the whole protocol is geared towards under collateralized lending for institutions in DeFi.
Yeah. And I think just yesterday, KPMG Canada announced that they bought a bunch of Bitcoin, I think it was, and maybe some Ether as well. I think it's a trend we're starting to see play out in that space too.
Yeah, I think a lot of the coverage on that was commenting on how, this is kind of a way for them to just distinguish themselves against the other big four, saying, we understand crypto. If you want to be on the cutting edge of finance, come to us. And I'm speaking in a few weeks at the Ernst & Young has a DeFi guild internally of just their own employees kind of getting together and trying to make sense of this new world. So, perhaps they'll kind of operationalize that this year as well.
Possibly. I mean, I used to work at Ernst & Young. I left there 2013. There was definitely no talk about crypto back then, or very little at least. But at the same time, sometimes you need to take these announcements with a grain of salt, because it could just be a bit of branding and publicity seeking, and like you said, positioning themselves as the crypto consultancy and trying to get their existing clients to come on board in that capacity. But how much they actually know about the space, like anyone in the space, it's constantly evolving and we're constantly learning as it evolves. So I think that's something to just keep in mind there. But with respect to the token, we mentioned earlier, when you hold the index token, it basically has utility by way of voting on product decisions and things of that persuasion. But going forward, I mean, what's the sort of overall supply of the index token, and what does the sort of vision of the cap table look like? Like, how will it be distributed, and say over what period of time?
Yeah, the index governance token, there's 10 million of them in supply, mostly sits in the Index Coop treasury. We did conduct a treasury diversification, essentially kind of raising an outside round of investors last summer. I think we sold about a $10 million worth of the index token, and then got investments from venture capitalists such as 1KX, Galaxy Digital, and Sequoia. So, it's very important for DAOs to diversify their treasury, so you're not sitting on 100% of your own token in the event of a bear market. That's actually something that we're kind of trying to address that market as well with some of our products, right? Certainly, crypto indexes can be a good way for DAOs to diversify their treasury. So yeah, there's 10 million tokens, and a lot of them in our treasury. We have vesting contracts that kind of distribute the tokens from the Index Coop treasury into our operations account, where we actually fund contributors and all sorts of operations. And yeah, you can see certainly the distribution schedule for that. If you go to the Index Coop Medium blog, right there in the very first post we ever put out, lays out the kind of the curve of how the tokens will be distributed over the next few years.
Great. And you mentioned there as well that Sequoia bought a bunch of tokens as well, which I think further to the points we were making earlier around trust and security. Like when you have such a big VC fund on board in some capacity, they've obviously done their due diligence, and that is a massive sort of green tick that signals to the rest of the market that, hey, these guys are legit. So while it's a form of diversifying your treasury, it's also a great way to build up that social proof.
Yeah, that's right. We were excited to have value add investors like Sequoia and Galaxy Digital on board. And certainly, they somewhat serve as advisors to us as well, right? When we have kind of key proposals coming through, we will often reach out to those investors for feedback. And yeah, it is a nice kind of stamp of social proof. Sequoia is not in the business of losing money. They saw something pretty interesting happening over here this DAO. And we're happy to have them invest. I think another interesting point to make out here, the index token also has a lot of governance power within DeFi. Similar, actually, kind of to if you think about how Blackrock's role is in kind of the equity market, where they, by way of creating these large index funds with so much assets under management, they accrue a lot of governance power over all of kind of the stocks they hold. They can vote. Similar kind of deal here, where all of those tokens that sit in that smart contract for DPI, Compound, Aave, Uniswap governance, the governance power for all of those tokens sitting in the index accrues back to our index token. So by buying that index token, investing in the Index Coop DAO, you also get governance power over all of those protocols that sit within our index. So the Index Coop is one of the largest vote holders of all of these DeFi protocols as well. So it kind of puts us in a nice spot of, having a lot of governance power to be a good steward of the DeFi ecosystem, as well as providing some utility for folks if they want to buy the index token, you want to buy a large chunk of it, you can make your own proposals on some of these protocols like Uniswap, Aave, Compound, etc. We're calling that meta governance.
No, that's a fantastic point. It's not just voting on decisions related to the index co-op, but as we said earlier, if it's the metaverse index, there are the Sandbox, the Decentralized, all these other organizations that sit underneath that, which you have some form of governance influence over now by holding the index token, which is a great point. And just on the index token, I did notice that since like June of last year to now, the price has gone from like 60 USD down to about 10 USD. What drove that dip?
Yeah, I think you saw this kind of bear market in DeFi as a sector. A lot of it has to do with just crypto going down, of course, but you saw these DeFi governance tokens go down relative to Ethereum as folks kind of decided they no longer wanted to hold these governance tokens. The value of voting on these protocols, they decided they didn't care quite as much as they thought when they, protocols first came about. So that explains it partly, but I think also the whole sector of DeFi becomes a bit inflationary when there's more and more DeFi protocols launching every week, right? So by holding, all of the Uniswap, Compound, and Aave's, like you thought you had all of DeFi by just having those, but anyone in their laptop can spin up a new protocol. And we saw the rise of DeFi 2.0 over this past year, kind of just the next wave of DeFi protocols launch. But many of those have kind of fizzled out recently. And, you're starting to see potentially that swinging back and folks realizing, okay, those, DeFi 1.0 protocols, maybe they're actually a little more solid than we thought. And the new version that anonymous developer 123456 spun up is not necessarily going to unseat it just because it's new and flashy.
Yeah. And I think that's probably one of the great things about bear markets is it kind of reveals who's legit and who's only here to capitalize on the bubble. And as you alluded to there, DeFi 1.0 companies seem to be more legit than some of these 2.0 players who came along when things were at their peak.
Yeah, a lot of the DeFi 2.0 protocols, as they're called, a lot of them had more creative takes on not only the protocols, but the tokenomics, right? You saw something like Olympus DAO paying out a massive APY in yields. But folks picked up those DeFi 2.0 tokens because they saw holding them, you could earn a large amount of yield. But absolutely. Bear market exposes, maybe the Ponzi-nomics of the 70,000% APY wasn't so solid after all. But, the market's the referee over the long run.
Yeah, absolutely. Absolutely. And I mean, just one last question on the Index Co-op, which I probably should have asked way back at the start of the conversation. But what have, say, the average returns been, say, for the DeFi index, for example, say over the last 12 months?
Good question. So we launched it in October of 2020, just at the tail end of the DeFi summer run. So we saw definitely a dip over the next 3 or 4 months there. And then resurgence screamed out to new all-time highs in that January, and then a new all-time high back in April. And then I'd say we're down 30-40% from the all-time high there, but still up from the genesis of the October 2020. Metaverse Index launched, I think, in May of 2021, launched around $100, came down to $25 at the low in late June 2021, and then went from 25 up to, I think, 320 or so was the all-time high sometime in like September, October, after you saw the Facebook announcement to change their name to Meta, the whole Metaverse Index, all of those tokens caught on fire, and then down a bit there. But, we launched all the tokens. They start at $100. I think the Metaverse Index is sitting somewhere between 250 and 300 now, something like that. And then the DPI is similarly somewhere around the 300s. But, I don't know that I have when you said what's the average return for these tokens, I don't have that number in my head. We're only, less than a year old for most of our products. But, they mostly track the crypto market. There's a high correlation to Bitcoin and Ether, as I said. But, we're starting to see a little bit of divergence from those correlations that I think is pretty exciting, especially with like the rise of NFTs. There's the utility of what you can do with the crypto asset is different than just watching it go up and down with the price of Bitcoin, right? In 2017, the only like a utility of an altcoin was that it had a higher beta than Bitcoin, but it was still just a coin that you traded. Now we're seeing real use cases with DeFi, NFTs, and DAOs. So we're starting to uncouple from just tracking the price of Bitcoin, which is exciting for someone creating structured financial products in this industry.
Yeah, and with respect to NFTs, I mean, are there plans to perhaps create a NFT index where you just buy a bunch of NFTs across these different collections, like the Bored Apes and the CryptoPunks, and track that?
Yeah, absolutely. We've had an NFT index in the works for a while. There's certainly a challenge there with trying to find liquidity for all of these different, non-fungible tokens. But we're getting close to launching it a few times. And, that just takes extra innovation in the space as far as there's protocols like NFTX that create vaults that basically buy up a bunch of CryptoPunks and Bored Apes and kind of like fractionalize those and create a token that we can put into our index. So yeah, there's a NFT index with the ticker symbol JPEG in the works, and hopefully we'll get to launch that in the next couple of months here.
I like that ticker symbol. That sounds really exciting. And lucky last question. You're on your way to ETH Denver, where you will be hosting a Web3 music show. What can you tell me about that, man?
Oh, man. Yeah, that's my passion project, is helping musicians tap into this Web3 technology as well. So there's certainly the idea of creating music NFTs, kind of a collectible version of your music, similarly to how folks buy a vinyl album, right? You're really just buying it to support the artist, to show that you're a true fan. NFTs give us the technology to kind of create, digitally authentic things on the blockchain. So, how cool would it be to invest in an up and coming artist, right? Everyone loves to think that, they were there when such and such, before they blew up. So yeah, I love helping out musicians kind of tap into these new technologies and figure out new business models for themselves, because, it's been a rough go the last few decades with the music industry. Never quite found, the right business models for artists when everything became digitized. So there's a lot of hopes and excitement that Web3 can be applied for music. And I'm certainly fired up about it myself. I think music is humanity's favorite art form. And we finally have some tools to kind of fix the broken digital business models there.
Well, that does sound really exciting. And I love the idea of, say, buying into an artist early on by, say, buying their social tokens, for example. And basically you become kind of like a independent, A&R man yourself, investing in all these artists from day one. And then it could be that one of them blows up and you've got a share of their future income or a share of their future royalties from their streams and things of that persuasion. And that's really exciting. But for the artist, it's also a form of revenue that still gives them control over their music, and they're not getting paid like $3 per 1,000 streams or whatever it is, like trying to balance some of the injustice that currently takes place in the world of music.
Yeah, absolutely. I think, Web3 and tokens is all about aligning incentives between the community and the creator. And there's, a lot of new design space for us to play with. Everyone's still trying to figure out what the right models are. But I'm excited to kind of be in the mud helping artists figure it out. And definitely I'm coming across, artists that I think are future gems that I'm, holding on to.
Awesome. Well, all the best with the show over at ETH Denver. Cruz, where do people find you online, and where do they learn more about the Index Coop?
Yeah. Thank you for having me on, Steve. Index Coop. To learn more, you can go to indexcoop.com. It's just COOP. However you want to pronounce it, that's how it's spelled. Indexcoop.com. And for me personally, you can find me at The Young Cruz everywhere on the internet, all the social platforms, but primarily Twitter is where everything happens in crypto.
Awesome. We'll add that to the show notes for our listeners. Cruz, thank you so much. You've been a gentleman and a scholar, and you've been a delight to have on the show.
Thank you, Steve. Thanks for having me on. Take care.
Hi guys, Steve again. I hope you enjoyed this episode. If you'd like to receive a weekly email from me, complete with reflections, books I've been reading, words of wisdom, and access to blogs, ebooks, and more that I'm publishing on a regular basis, just leave your details at futuresquared.xyz/subscribe and you'll receive the very next one. If you're picking up what I'm putting down, take a minute to like, share, or subscribe on Apple Podcasts, Google Play, Spotify, or wherever you get your podcasts. It goes a long way to giving the podcast the exposure it needs so I can continue bringing you guests and conversations of the highest caliber. You can catch me on Twitter at Steve Glibeski and on Instagram at @TheSteveGlibeski. Until next time.
Hasta la vista, baby.
This has been a No Filter Media production.
Say what you want.